about the tariff impact and what could happen to India if the tariffs on April 2 are imposed on us. We were in conversation with Mr. Ajay Srivastav as well as Mr. Nandan Chakrabarti on the same. But time now to talk about the impact of tariffs on the potential impact rather of tariffs on the oil and gas space. And to do that, let's welcome on board Mr. Probal Sen, the Vice President of Equity Research at ICICI Securities. Morning, Mr. Sen, and thanks so much for joining us. First up, we have to talk about the tariffs and what Trump is expected to do. Trump has announced that he will impose 25% tariff on oil and gas imports from any country purchasing Venezuelan crude. How much exposure, help us understand, does India have on Venezuela for crude? How much is the dependence? And how could this impact our oil and gas market if this plays out the way Trump has expected it to?
So first of all, total crudes from Venezuela, exact number of course is hard to come by, but based on reports of various companies, we import somewhere around 240, 220 to 240,000 barrels of oil per day from Venezuela. It is a small number relative to our overall imports of close to 4.5 million barrels of oil per day. So to that extent, the number is not material. Having said that, the issue really is whether there will be any time given to sort of replace these barrels. If you have to sort of take a hit and sort of replace these Venezuelan crude, obviously there will be a time lag in terms of arranging other sources of crude. There is enough supply available in the global markets. There is, as you would have known, there is a decent amount of oversupply that exists. So replacing this kind of a volume should not ideally be a challenge. The only question would be how much time does it take, and whether there are any legal implications in terms of replacing these contracts with fresh crude contracts from other destinations, whether it's from the Middle East or even from America or some other sources. But from an impact perspective, I think replacing Venezuelan crude is relatively much easier than it would be to replace, let's say, Russian crude, which has also been an issue of contention, or basically replacing some all the crude that we still import from the Middle East and other sources.
That's about the take when you talk about the tariffs, especially on the Venezuelan crude. A very good morning to you, Mr. Sen. This is also joining in the conversation. But I wanted to also ask you about the recent news flow that actually saw a movement in the city gas distribution companies, or actually gas companies back home. And that is the PNGRB has initiated the public consultation process when you talk about in order to amend the pipeline tariff regulations. If you could help us understand the significance of this, what will be the impact of this, which companies stand to benefit, and how should one read into this development?
So first of all, it is a public consultation document. It's not a notification as yet. So obviously there would be a little bit of back and forth between the stakeholders and the regulator. But the consultation document clearly lays out two things. One is, of course, it changes the norms for revenue that is earned above the nominated capacity. What it means is earlier the tariff was essentially decided on an assumption of 75% of your overall capacity of a pipeline. So if you have a capacity of 10 MMSCMD, let's say, 7.5 MMSCMD would be what would be assumed. Now, a situation where a company manages to flow a higher volume post the determination of the tariff, 100% of such additional revenue was supposed to be sort of given back to the to sort of the customer, passed on, or you cannot retain any of it. So one key change that is proposed is that 50% of such excess that you're now flowing, you're actually going to be able to retain, albeit in a specified separate account, but you can actually use that for your further expansions and further capex, which is obviously a positive for all transmission players, whether it's GAIL or GSPL, if their volumes actually exceed the nominated levels. The second thing, as far as delimitation of zones, earlier a pipeline was divided into 3 zones for the purposes of tariff. Obviously, the tariff being the lowest in the zone nearest to the origination of the pipeline and being highest at the furthest end. That has been probably simplified into 2 zones. And more importantly, gas being supplied to priority sectors, to, for example, a city gas company buying gas and transporting it using GAIL's network. If he's supplying that gas to domestic households and the transportation segment, from what we understand, he will be liable only to pay Zone 1 tariffs, irrespective of where on the pipeline he is, which is obviously a marginal positive for CGDs as well. So obviously details and all in terms of how the modalities will be there will are yet to come out. But on the margin, I think these things are a positive, and more importantly, the fact that the public consultation document has come out also makes us optimistic that Gale's long pending tariff order is also something that could probably come about in due course, which they've been waiting for a very long time, with specifically with respect to the gas cost assumption, which could lead to an increase in their blended tariff substantially.
Okay, so that's the take coming in on GAIL and some of the companies that could be positively affected by this. But also, Mr. Sen, want to get your view on LPG, right? Because what are your estimates on LPG under recoveries for next year, and what will be the EPS impact if there is no subsidy this year or even next year? What are you seeing the impact on EPS when it comes to LPG under recoveries?
I apologize, I don't have the EPS estimates in front of me, but the LPG estimate for this year is around 40 or 1,000 crore. 30,000 plus crore is already something that's outstanding as of 9 months. One would expect another 10 to 11,000 crore could be accumulated in the fourth quarter. Now, earlier we were building in a partial, compensation coming through ahead of the budget, but post the disappointment there, and even though there are news reports still coming out that there could be some compensation provided, as of now, our base case estimates do not really build in, any compensation coming through for next year. I think it's a little bit tricky because then it involves a lot of assumptions about LPG prices and what will happen to the selling prices as well, and what mechanism could be worked out. So we're not building in a huge number for subsidy for FY26, but for 25, this 40 or 1,000 crore, we are not assuming that it will be compensated at this point of time.
Okay, and Mr. Sen, before we let you go, just quickly, could you give us your view on where you are seeing WTI and Brent crude levels now that we've seen quite the cut coming in both of them? So could you just give us a quick view on what your targets are for both of them?
I I wish I had a more coherent answer in terms of crude direction, but I think what we are building in is a band of $70 to $75 for Brent, which translates to about a couple of dollars less for WTI. But if directionally, I think the trend should continue to be in a narrow range. There are some bullish triggers because of the Venezuelan oil supply, potentially being taken off the market. But again, to put it in the global context, Venezuela's overall crude exports were hardly about 650 to 670,000 barrels oil per day out of a total supply of more than 100 billion barrels. So, it's not something that cannot be sort of compensated by other sources. OPEC alone is, sitting on more than 5 million barrels a day of spare capacity, as per different reports. Even if you were to assume that there is some exaggeration, at the very least 3 to 4 million barrels is something that can be brought back to the market in a short period of time. So, if given that that's the case and demand is not going up by more than 0.9 to 1 million barrels of oil per day, at least this year and the next, it's very difficult to see a sustained bullishness in crude prices. How low it can go is something that's a matter of financial speculation and what is a threshold level for US shale producers. That's why I'm saying broadly you would probably see it in a narrow band. It could be 65 to 75. We are building in a 70 to 75 at this point of time in our estimates.
Okay, Mr. Sen, thanks so much for joining us and very candidly sharing your outlook on the entire oil and gas space. On that note, we'll let you go. So viewers, time to slip into a short break. Word coming from...
If you like this video, then like, share and subscribe to ET Now.